Hello everyone, it's Wednesday, February 11, and today we will analyze the charts for the euro and the British pound to identify potential market moves. As you can see, the European currency remains range-bound, with market equilibrium holding ahead of key US labour market data. The British pound is also trading in a sideways range, limited by the levels of 36.24 and 1.3698. Despite a minor correction on Tuesday, sterling retains potential for further upside. Yesterday, the dollar faced some pressure following the release of the US retail sales report for December, which came in flat month-over-month against an unexpected 0.4% gain. This disappointing print hints at a potential slowdown in US economic momentum, even as many focused robust performance for the year ahead. Today's macroeconomic calendar features no significant releases from the euro area, although Italy is scheduled to report data on industrial production. Although the indicator is projected to decline, this report is likely to be overlooked by traders. Instead, the focus will be on US non-farm payrolls for January, which are expected to deliver weak growth. Notably, the US economy added 56,000 jobs in November and 50,000 in December, following a significant drop on 105,000 in October. The January report is anticipated to show an increase of 70,000 jobs. If the figure falls below the consensus estimate, it could raise alarm bells for the Federal Reserve. It is worth noting that in recent months, numerous policymakers, including Jerome Powell, have suggested that the labor market situation is increasingly under control. Consequently, a weaker report could place significant downward pressure on the dollar, prompting the Fed to consider earlier interest rate cuts than initially projected for this summer. The US unemployment rate is forecast to remain unchanged at 4.4%. Unemployment has been on the rise since June 2025, increasingly from 4.1% to 4.5% in November, while the figure dipped to 4.4% in December. If the January unemployment rate decreases more than expected, it could provide a reason for increased dollar buying. In addition, traders will be looking out for data on average hourly earnings and private payrolls, as we all for the speeches by Fed officials Michelle Bowman and Jeffrey Schmidt. Market participants will closely monitor their comments on the latest labor market data. Turning to technical analysis, the 1-hour EUR USD chart suggests buying opportunities on a false breakout at 18.90 and 18.58, or on a rebound at 18.32, targeting a 20-25 pip move. Bears are likely to step in around 1.1925, especially ahead of US jobs data. A false breakout at this level could trigger a sell signal, dragging the euro down to 18.90. If selling is muted and the price breaks through and consolidates above 19.25, that would turn the bullish case back on, with the euro climbing to 19.57 and, in case of weak US statistics, possibly reaching 1.1995. At this level, I would recommend going short on a rebound, aiming for an intraday correction of 25-30 pips. Short positions at 19.57 and 19.25 should be considered only after a false breakout. Speaking of the British pound, it is currently trading in the middle of the sideways range, around 36.62. With no UK data due out today, a false breakout at this area could confirm a sell entry, with sterling sliding to 36.24, where buyers are likely to take control. In case of subdued selling activity at 1.3662, it would make sense to hold off on long entries until the price reaches 36.98 on a false breakout, or 37.29 and 37.57 on a rebound, counting on an intraday correction of 20-25 pips. Going long would be relevant at 36.24 on a false breakout, or after a break and consolidation above 36.62 targeting a rise to 36.98. Alternatively, long positions on the rebound could be considered at 35.87, anticipating a 30-35 pip move. Best of luck to everyone.